Hello friends, welcome to key highlights of budget 2022. In line with our initiative last year, this year also we have prepared key highlights and we will discuss some of the key tax proposals and some budget financials for educational purpose, right? So our objective shall be to cover maximum possible proposals in minimum possible time and discuss it in as much depth as possible. So friends, let us start. So these are the contents. We'll be starting off with economic performance and budget financials. Then we'll move on to proposals of direct taxes, indirect taxes, GST and customs. So let us start off with economic performance. So friends, coming to economic performance, GDP we are seeing a growth, but that is owing to lower base in 2021, owing to negative growth of 7.25 in 2021. We are seeing a growth of 9.18% in current year. The new statistic we added this year is currency in circulation. As we can see, currency in circulation has increased over a period of time. Even for current year, it is estimated to increase by around 7.8%. IIP figures as well, we can see the same trend. Going to lower base last year, degrowth of 15%, IIP is growing at 17.4% in current year. Both import and export have declined to considerable level. The net foreign investment, FDI, FII, FPI, all inclusive, has gone down to $25 billion. That is the estimate. Previous year it was around 80 billion. Okay. Now moving on to key budget financials. As we can see that primary deficit and fiscal deficit had increased last year to 3.3 and 6.9% respectively. This year we are expecting a nominal reduction in year 22-23. Okay. So now looking at where rupee comes from and where rupee goes. So the key changes are in non-debt capital receipts, which have gone down compared to last year. GST collections have gone up and the source of rupee has changed accordingly. And in case of application of rupee, the application is higher on the interest side as compared to previous year. So moving on to the next slide. So these are some of the key policy announcements. Digital rupee is proposed to be issued by RBI. RBI's own cryptocurrency in current year. In telecom sector, a scheme for design-led manufacturing is to be launched to build a strong ecosystem for 5G as part of PLI. Solar power also, an additional allocation of 19,500 crores has been made. Again for PLI, for producing high efficiency modules for achieving goal of 280 gigawatts of installed solar capacity by 2030. Moving on to next slide. Electric vehicle. Battery swapping policy is to be brought and interoperability standards are to be introduced. Capital expenditure has been stepped up sharply by 35% in current budget. This will be total outlay of around 2.9% of GDP. There are some changes proposed in company law, whereby voluntary winding up of company a period would be reduced to around 6 months from existing 2 years. Okay friends, we move on to direct tax proposals now. The first is alternate minimum tax. Alternate minimum tax is proposed to be reduced in case of unit located in IFSC like Gift City. So there the rate is proposed to be reduced by 18.5% to around 9%. Also in case of cooperative societies, the AMT is proposed to be reduced from 18.5 to 15%. Now coming to surcharge. For cooperative societies, there is a change in existing and proposed rate of surcharge. The existing rate is 12%. The proposed rate for cooperatives having income between 1 to 10 crores is to be kept at 7%. So all the cooperatives who have income higher than 10 crores, the 12% rate will be applicable. There is again an interesting change in surcharge on AOPs. So often foreign companies come together for certain projects as association of person, and then they are subjected to higher surcharge at 25 and 37%. So this has been capped at 15% for income 1 crore and above. So for AOPs with income below 1 crore, that is between 50 lakhs to 1 crore, it will be still at 10%. But in case of income is above 10 crores, the surcharge will be capped at 15%. This is mainly for the non-resident AOPs. Okay, we shall move on to the next slide. Now there is again a major change in applicability of surcharge. Surcharge rate on long-term capital gain has been brought down. So initially for surcharge, the surcharge on LTCG under 112A, that is the on equities, long term on equities, short term section 11111, that is again a short term gain on equities and dividend. So if the income range was from 50 lakhs to 1 crore, the surcharge was 10%. Now long term capital gain under section 112 has also been included in this, and accordingly the preferential rate of 10% and 15% of surcharge will be extended on capital gain covered under section 112, and accordingly to give the corresponding effect, section 112 has been excluded from the 25 and 37% rates of surcharge. So let us take a practical example. Let us say if a assessee is having income of 2.5 crores and 2 crores is from remuneration, that is salary, and 0.5 is from capital gain dividend tax or capital gain on section 112. So in that case, the 0.5 crore, that is 50 lakhs, surcharge will be 10%, and in case of 2 crores, that is the normal income, surcharge will be 25%. So let us take one more example. Let us say the total income of 5 crores is from either dividend or capital gain under 112 or 112A. In that case, surcharge will be capped at only 15%. So this has a substantial impact on HNIs. So we will now, friends, move on to the next slide. Incentives to newly incorporated entities under section 115 BAB, that is the manufacturing incentives. The concessional rate of 15% has again been extended by 1 year. So new entities who are being incorporated till 31/3/24 will also be covered. Dividend from foreign companies. So there was a category of foreign companies from whom if the dividend is received by domestic companies holding 26% of stake, and there are some other conditions, so they used to get a preferential rate of 15% in case of dividends, but that is proposed to be done away with from 1/4/23. We'll now move on to the next slide. Virtual digital assets. So this is the hot topic in this budget, and under the definition of virtual digital assets, cryptocurrencies are covered, NFTs are covered, and some other assets also might be covered in future. So as per the current proposal, income from transfer of value of digital assets would be charged at flat rate of 30%, and no deduction would be allowed against such income of any expenditure if it is incurred for generating such income. However, cost of acquisition of these assets will be allowed as an expense. Further, also no set off or carry forward or no set off of losses would be allowed in such income. So if you have some other losses, you cannot set off against this income. Also, if you have losses in these virtual digital assets, like say in crypto, you cannot set it off against your other income. Also, gift of virtual digital asset is also now taxable, and also some TDS provisions have been included in case of these virtual digital assets, which we will cover in certain subsequent slides. And the effect of taxability will come from 1st of April. So we still have 1st of April 23. So we still have one more year. Maybe we'll get some more clarification from the government about cryptos and NFTs. Okay, so friends, we'll move on to the next slide. Specified income of certain institutions. Now, certain trusts, hospital, universities, you know, their income are certain often received by certain trustees in certain cases. So in these cases, no deduction of expenditure would be allowed, and no set off would be allowed against such income, and such income would be chargeable in hands of the assessee, that is in hands of recipients in certain cases. So we'll move on to the next slide. Scientific research. So for companies who are claiming deduction under scientific research, the certificate requirement has become mandatory. So one will have to obtain mandatorily a certificate with effect from 1st April 21. Disallowable expenditure. So this is just a clarification. In surcharge in higher secondary cess is disallowable expenditure. The reason for introducing this in statute is that some of the high courts and high courts had issued a judgment contrary to this. So just to clarify, the government has introduced this clarification in statute. So friends, we'll move on to the next slide. Tax on accredited income. So tax on accredited income is prevalent. Accredited income is, in case if the trust merges with some other entities, non-trust entities, and there is change in their purpose, and there are certain other cases specified. So this accredited income provision was applicable only to trusts, but now it has been extended to other institutions as well, including university, other education institution, medical institution, etc. Also, a penal interest of 1% per month will be applicable on these other institutions where accredited income is applicable. Okay, so we'll move on to next slide. Penalty for violation under section 1023C. Benefits to related person. So whenever a trust passes on benefit to a related person, the penalty has been changed from the current year. So if any benefit is passed on to related person, the amount of penalty would be the total amount of income applied for such benefit, that is the amount of benefit passed on. And for second violation, the penalty would be twice the amount of benefit, that is the income applied for such benefit. Okay, so we'll move on to the next slide. So there is certain relief for COVID-19. So money received by any person in respect of expenditure incurred on medical treatment under COVID will be exempt. Money received by family members of deceased person for person who has died because of COVID from employer or any other person up to 10 lakhs will not be treated as income. The condition is that it must be received within 12 months of death of the person. Also, COVID-related medical expenditure, if reimbursed by employer, will not be taxable as perquisite in hand of the employee. Okay, so we'll move on to the next one. Deductions. Contribution to national pension scheme. This is for government employees. That is for mainly state government employees. The earlier deduction of 10% was allowed, but now it is allowed up to 14%. Central government employees, there is no change. Tax relief to disabled person. Again, there is this change for disabled person. So a disabled person, if he is receiving any annuity, right, it shall be exempt if his parents or guardians age has crossed 60. Earlier, this benefit was available to disabled person only on death of his parents or guardians. So this is a additional kind of tax relief. Incentive to startup. We are all aware that incentive for 3 years out of 10 years, first 10 years of startup was available. So this has been extended. Validity has been extended till 31/3/24. So any startup formed before 31/3/24 will be eligible. Okay, we'll move on to the next slide. Income of offshore IFSC. So deduction in respect of income in respect of transfer of leased aircraft was available for units located in IFSC. This has been extended to transfer of leased ship also located in IFSC. The unit is located in IFSC. In case of computation of capital gain in case of goodwill, so there is a change. Goodwill will not be a depreciable asset anymore, and deduction will be considered as deemed transfer, subject to tax. We'll move on to the next slide. Set off of losses. So there is a change in set of provisions. Set off of losses or unabsorbed depreciation is not allowed now against undisclosed income found in course of search or seizure, applicable in cases of raid. A new concept of updated return has been introduced. This is other than the revised return. Revised return is applicable. However, assessee can also file now updated return on payment of additional tax from end of relevant assessment year on voluntary basis. But updated return can only be filed if there is any additional payment of tax. If there is no additional payment of tax, updated return cannot be filed. Then the assessee will have to go under the regular revised return provisions. Okay, so we'll move on to the next slide. Transfer of immovable property. So 1% TDS is applicable on the consideration as we know. However, there is a small change now. So TDS will be on 1% of consideration or stamp duty value, whichever is higher. Also, the limit of 50 lakhs is applicable as we know. So the limit of 50 lakhs, the threshold of 50 lakhs was supposed to be about the value of property, the consideration. Now it is lower of stamp duty value or the consideration. So both. So that is both have to be less than 50 lakhs for TDS not to apply. Okay, so we go on to the next provision, higher TDS-TCS, section 206 AB CCA. So this was introduced in last budget, where in respect of certain non-filers who have not filed return for 2 years, the TDS is deducted at higher rate or TCS is collected at higher rate. That is twice the rate or 5%, whichever is higher. However, there are some changes. The criteria of 2 years has been reduced to 1 year, and also TDS liability under certain sections, that is 194 IA, IB, and 194M, has been excluded from the scope. So, friends, we'll move on to the next slide. A new TDS has been introduced on benefit or perquisites. So, any benefit or perquisite arising to a resident out of any business or professional activity, whether it is convertible in money or not. So the TDS rate applicable is 10%. So in my view, this will cover any kind of payment which is also in kind. So let us say instead of monetary consideration, something in in terms of gold is paid, say let us say gold worth 50,000. So then in that case the TDS will be applicable on value of 50,000. The TDS rate is 10%, and let us go through the applicability. So applicability in this case is that value of perquisites offered should not exceed 20,000. So if it is above 20, it will be applicable. Also, person being individual or HUF whose sales and gross receipts do not exceed 1 crore and 50 lakhs respectively, they will not be covered. Okay friends, we'll go to the next provision. TDS on virtual digital assets, again crypto and NFTs. So TDS at rate of 1% is applicable on consideration for transfer of virtual digital asset. So as per the law, for transfer of any crypto or NFT, 1% TDS will have to be deducted by the payer. The value of consideration should exceed 50,000. Below 50,000, it is not deductible. In case of individuals and HUFs with turnover less than 1 crore and 50 lakhs in business and profession respectively. Also, in case of individuals or HUF not having income under business head, the limit of 50,000 is applicable. However, for all other SSEs, any transaction with consideration more than 10,000 rupees in the current financial year, the TDS of 1% is applicable. So let us just summarize this particular provision again. If you are paying any consideration for any crypto asset, whether cryptocurrency or NFT or any other asset, TDS will have to be deducted at 1%. If the amount exceeds 10,000 in normal cases and 50,000 for specified SSEs specified in this particular slide. Okay friends, we'll move on to the next provision. Assessment procedure. AO is supposed to now pass order in conformity with Dispute Resolution Committee's order. Earlier, order in conformity with DRC's order was not required. Insolvency, bankruptcy. So now the assessing officer under income tax shall be required to revise the order and demand in conformity with order issued by adjudicating authority under IBC. So IBC will prevail over the income tax order, and AO is liable to modify and revise the order. Okay, let's move on to the next slide. Different for TDS where it was not required. So this is for non-residents. TDS for non-residents is required under section 195, and where the non-resident taxpayer believes that TDS was not supposed to be deducted and it has been deducted, the taxpayer, that is the non-resident, can now apply for refund to assessing officer instead of appealing to CITA, which was the earlier provision. Penalty in case of answering certain questions has been increased to 500 per day from earlier rupees 100 per day. We will move on to the next slide. Submission of statements by producer of cinematography films. So the submission period for producers of cinematography films was 30 days from date of completion of film or from completion of financial year. So this is proposed to be changed, but the period will be prescribed by government in future. The period has not yet been prescribed. Also, there has been change in coverage of producers. So earlier only producers of cinematography films were covered. However, now even event management companies, documentary production companies are also included. So the scope has been widened. Okay, we'll move on to the next slide. Business succession. So friends, now business succession is also happening because of adjudication of IBC and other high court judgments. So the requirement is now that the successor will have to furnish a modified return of income within period of 6 months from which date the order is given by the high court or adjudicating authority under IBC. So friends, with this we are done with the income tax provisions, and now we'll move on to GST and and excise. Friends, there are quite a few changes pertaining to input tax credit in GST, and we'll take each of them one by one. So credit will now be availed only if credit is not restricted in the details communicated by supplier in his communication. So if in his communication it is expressly mentioned that the credit is restricted, you cannot take the credit. Secondly, time limit for availing the input credit is proposed to be changed to 13th of November of subsequent year. Right? So earlier it was due date of return for the month of September of subsequent year. So now they have expressly mentioned 13th of November of subsequent year. Similarly, rectification of errors in ITC can now also be done up to 13th of November of subsequent year. Then auto-generated statements have been introduced, which will contain details of ITC, which will be made available to the recipients. So this will essentially do away with two-way communication process, which was required earlier. Self-assessed input tax credit will be reversed with interest where tax is not paid by supplier, and the interest rate here has been revised to 18% retrospectively. Earlier it was 24%, so there is some relief for the taxpayers here. And now we'll move on to the next slide. Electronic cash ledger. So a big change is proposed over here. Balances are proposed to be now transferable to other registration of the same assessee in same state or other state under section 25(4) and 5. So assessees who are having multiple registration within a state or some balances and they want to transfer in other state, this is now supposed to be permissible, but the actual mechanism the government will have to derive and incorporate in the electronic cash ledger, which is proposed to be allowed. And it will provide relief to some of the assessees who are having surplus credit in some of their units and not so in some others. GST exemptions. GST exemptions on unintended waste generated during fish meal production is granted, except for fish oil. Exclusion from supply. Grant of alcoholic liquor license against fee by state government to neither be treated as goods or service and excluded from supply. No GST will be applicable on that. And we'll now move on to the next point. Returns. So the time limit for non-residents for filing the return was 20th of subsequent month, which has been now revised to 13th of subsequent month. This is only for non-residents. Rectification of errors time limit also extended for all assessees till 13th of November of subsequent financial year. Two-way communication process in returns is proposed to be done away with, and the sections of two-way communication requiring matching online are proposed to be removed. Time limit of issuing credit note has also been extended now till 13th of November of subsequent year. Coming to the excise portion, additional basic excise duty of 2 per litre to be levied on petrol and diesel to promote blending of fuel. This will be from 1st of October 22. Friends, with this we are done with the GST part, and now we come to major changes in customs. We move on to the next slide. Withdrawal of application. Advance ruling. So currently application can be withdrawn only within 13 days of application. However, now flexibility is provided to applicant. He can withdraw the application at any point in time. Coming to validity of advance ruling. So currently there is no specific time limit for validity of advance ruling, but now the time limit has been fixed to 3 years or the change in law or fact, whichever is earlier. Okay friends, so now we come on to major rate changes in customs. Okay, so in edible oil there is a change. Microbial fats, they are proposed to be taxed at substantial higher rates. Imitation jewelry again is proposed to be taxed at substantially higher rates. A flat rate of 400 per kg has been introduced. For renewable energy, solar cells and solar modules are to be taxed at higher rate. This is to incentivize, to give boost to local manufacturers. Coming on to next slide. Electrical and electronic items, loudspeakers, etc., smart meters, headphones, all are proposed to be taxed at higher rates. To again, this is to create a room for local manufacturers. Now we'll move on to the next slide. Capital goods, ball screw, SG ingot castings, coffee roasting, brewing and vending machines, all are proposed to be taxed at relatively lower rates. We'll move on to the next slide. Agriculture products, algal oil, liver black tiger shrimp are proposed to be taxed at lower rates. Coming to diamonds, natural diamonds are proposed to be taxed at nil rate. So a reduction from 10%, substantial change. Even there is change in cut and polished diamonds, rate is coming down to 5% from 7.5, and for other gemstones also the rate is coming down to 5% from 7.5%. I will move on to the next point. Methanol is proposed to be taxed at lower rate. Acetic acid is proposed to be taxed at lower rate. Cocoa beans are supposed to be taxed at substantially lower rates from 30 to 15%. Okay, we move on to the next slide. So there are some long-term changes proposed in customs. Printed circuit board assembly, currently it's not taxable, it's exempt. In current year it is proposed to remain exempt. However, from 2023-24 it is proposed to be taxed at certain rates. Charging cables proposed to be exempt in this financial year, that is 22-23, and subsequently they are supposed to be taxed. The same is the case in battery, it is exempted for 1 year, and subsequently it is supposed to be taxed at incremental rates. Also, now coming on to next slide, certain exemptions are being withdrawn. Certain exemptions from 1.4.22 and certain from 1.4.23. In textile sector, exemption on spindles, yarn, balloon control rings, etc. are being withdrawn, and they will be henceforth taxed. Power sector, transformers, reactors, circuit breakers are proposed to be brought under levy. Also in case